Hey traders, Nick here, recapping the week ending 11/7/2014. An impressive performance again. We had some events. We had the ECB rate decision and forecast, and we also had jobs numbers today. Um, ECB delivered nothing except for more yak, and we bought it. We, as in the markets, we actually bought it. In fact, we did buy it because of the what I mentioned yesterday, the fact that Draghi, who wants the QE, sounds combative, and he sounds like he's going to fight for it and trying to convince everybody to play along and how they need it. And so far, the economic reports have can support his argument. So let's put it that way. So I believe going forward, good news will be bad news out of the ECB economic reports. However, today's news was whatever out of Germany economic reports. I can't remember what it was. It was bad, so it still supports his arguments. Okay, today's scoreboard flat, pretty much. The Dow's up 0.11%, S&P up 0.03%, although red up until the last second, and I emphasize that. NASDAQ almost green, minus 0.09%, also way redder until the last second. They tried to push it, and if you look after hours, they went back to exactly where they were, redder than this. Everything was a little red, and now everything is a little flat to green. Small caps 0.12 plus percent. The Nasdaq, NDX, and the Qs are the only two red ones that I see in front of me here. Even the mid caps are flat-ish, a little green. Now, if you told me that the markets are flat, I'd expect all the other variables that are in play this week to be flat-ish, right? Nothing drastic. Not so. What do I mean? Okay, markets are flat. VIX should be flat-ish. It's down 4%. Another thing, recently we've had an inverse trade between bonds and markets, right? Bonds rally, markets drop. So when markets are flat, I expect bonds to have done nothing today. They're up over 1%. Conversely, recently we've been moving in tick, in stride with the 10-year rates. So if the 10-year rates are up, we're up. If the markets are up, then 10-year rates chances are up. So if you tell me markets are flat, I look at the 10-year rates, they're down almost 3%, 2.6% in one day, down in one day. Okay, the overnight high was $24 and 2.41 almost, and the low of the day 2.3. So that's a big move for rates, in terms of rates. So something's amiss, right? I don't know who's lying. I don't want to take sides, but I don't like when I see things that are unexpected. Okay, I'm a planner by nature. I need to know what happens. So the scoreboard today was flat with a big question mark. All right, the scoreboard for the week, there's no doubt about it, except for the small caps, is green. So let's review that. Okay, so I'll hit the charts. This is 1 year. Each candle is 1 week. This is the SPY, the S&P. We got tested hard, big candle, big volume. We rejected it. We bounced giant green candle, smaller green candle, although still very big, in a row. Third one in a row, still decent size, also pretty bullish. However, I note that the volume is less than half and lower. So dwindling volume. Look at the volume here. Look at the volume here. Those two red candles. The green candles don't, 3 green candles don't add up to the 2 eyeball. So yeah, I'd like to see bigger volumes to make emphatic statements. And we are at all-time highs. We are at all-time highs. That's what worries me. If we weren't, then I'd be more comfortable. However, we did recover the channel. This is a long time channel. Remember that? A 2-year long channel with the dash green that we were so afraid that we lost it. And oh my gosh, we had the death cross, whatever, on TV they were talking about. And when we recovered it, I said, is it going to be resistance? Now we were coming at it from the bottom. Not so. We broke it. And now we're back into the channel. So now we can trade ranges. That's what we like to do, trade ranges. So now we're closer to the upper end of the range than the lower end of the range. So next week we need to make a few decisions, we as in the markets. So this is the S&P. How about the Qs, which represent the Nasdaq? Did they also have a green candle? I bet they did. But it's a doji candle, meaning it's indecision. So the markets opened, they tried to sell it off at one point, they tried to buy it at one point, still a tight range, but then they decided, we don't know enough, we're just gonna, yeah, a little green, that's fine, but we're not gonna commit to anything one way or another. So they're indecision. That doesn't mean they're going to sell off next week. It just means that they're indecisive today. Usually, the following candle is bigger than the move is bigger than just one normal candle. It's kind of like pent up demand over two candles is worth in one. We did bounce off of the lower level, so now again we're trading a nice channel. So let's see. Let's see what happens next time around. The IWM represents small caps. Anytime, thank you. Okay, why does it look like that? I don't know what happened. So anyway, it is a red candle, also doji-ish, and also the volumes are dwindling, but here the volumes are a little different story because it was so emphatic in the bounce and so early. So the small caps I still like, but we're not at all-time highs, and we're not at all-time highs with the Qs because we all know where the Qs all-time highs happened. That was in the dot-com bubble. This is the small caps via the RUT. For some reason, the other one is showing me a funky squeeze on the chart. So here, the all-time high were this area here. I believe this was the all-time high right here. So we're not there yet. And this candle could have told us, oh my gosh, we're going to get there in not just another week. Well, this is an indecisive candle again. Little red, it doesn't matter. The statement is the same. It's indecision. They don't know which way to commit or not. So next week is going to be pretty important. Why do I say that? Because the headlines are fewer, the scheduled headlines. In other words, we don't have an ECB event, we don't have jobs. We have a few reports, no doubt. We have China reports coming over the weekends too, but another side note on that one. But we have a decision to make. We should trade on fundamentals. So where is the positive catalyst coming from to feed all-time highs or recovery of all-time highs or getting closer to all-time highs for the Nasdaq? So I need to know, why am I buying the market? Do I short everything inside? No, I can short a few things, but I can go a few longs, like Alibaba, for example. It's a long regardless if the market is going to correct or not. Over the long haul, I can pick January leaps, or even further, I can go out to 2016. I can buy calls in 2016. Yes, they're expensive, but it's a long play. And you can put them to work by selling calls against them, covered calls. So there are plenty of ways. You can buy a call spread if you don't want to spend so much money. You hedge your bet. You can do broken wings. I don't like call flies because they're hard to monetize. For me, they are. I haven't had any success with them, and they're a big headache. Broken wings are easier to monetize. So if you don't know what that is, we can have a little class on that one. So what's next? We have fewer headlines, so more fundamental. Where to? Up or down? Let me ask you this. I keep hearing everybody's on the same trade now. Oh, it's long until the end of the year. And one of the big arguments that they use is that what about the money that's on the sideline? Oh my gosh, there's so much money on the sideline. But then most of that money, or a lot of it, came from them telling me, the same people telling me now, money on the sideline, that everybody booked their profits and just went away for the rest of the year. Why chance it, right? So if that's the case, they didn't miss on much because they booked at all-time highs. And now we're at all-time highs, but it's pretty close to where they booked from. Plus, if we're at all-time highs, if I'm all in cash and I want to go into the market that's at all-time highs, am I more likely to go heavy long or heavy short? I'm not likely to go heavy long. I'm likely to go more long than short. I'll take a few longs, but I'll short a few. So money is not going to come pouring in on the long side. If it is, it's stupid money. So that's my opinion. So the argument is, it's still up in the air whether it's as a matter of fact, let me use the words that they used on NBC Fast Money. I think one or two people on there, smart guys and girls, but they said it's a no-brainer. Well, if it's a no-brainer, I ask you this. If somebody said it in front of me, oh, it's a no-brainer, we're going to be higher at the end of the year. Well, then You should have your entire money, and your entire family money all into the long side of the trade. Otherwise, why wouldn't you? If you can't put all your money on it, then it's not a no-brainer. If it's a no-brainer, no-brainer is a sure thing. There's no such thing as a sure thing. It's not a no-brainer. If everybody thinks it's a no-brainer, we're in deep trouble. The bull's in deep trouble. That's my opinion. And it seems like everybody's on the same no-brainer trade. So I caution anybody to accept that fact, accept that notion as fact. So stay with the winners. Baba paid, and Alibaba paid on the long side. And shed a few losers. If you've got a couple of tough trades, either hedge them by going opposite or just close it. Sometimes you can close it. If the overall portfolio is healthy, that's all that really care about. You can lose one or two trades. It's not that bad. So the scoreboard for the week, it's green. But next week is a different story because we have to trade fundamentals at one point or another. This headline trading is just developing bad habits, and it everybody that's doing homework, all the people that are smart in the business are getting killed because they do homework and then the headline comes out one way or another, up or down. And then like Bank of America yesterday, down headline. That somebody that did research, book value is this, they're looking good, and then bad headline comes out. All the homework and hard work is done over a headline. So then, you have to ask yourself, do I feel gutsy enough to go along? So today, I've harped over it, but this is the macro. The macro has been thesis, been leave room for the upside because we have room to crawl, and leave some room to the downside, but we don't have this major disaster. Everybody waiting for the major disaster. I wasn't. I said there is downside. And it was proven there was downside, but not minus 20%. Everybody's saying 5 to 10%. That's an acceptable downside scenario for a well-balanced portfolio. So we left room for the upside all year long, and we went long some stuff and leaving some room for the downside. Perfect example is that RUT trade that survived the downside. So, and it was profitable. So the thesis is still the same. It's just shifted in time. And before I say, okay, I can't be short anymore at all, I need more reasons for that. Like if, Draghi says we're going to pour $1 trillion into the economy and spruce them up, that might sway me to say, oh my gosh, this is, new money. Until then, I try to trade the ranges. Speaking of ranges, this week's ranges held up. Although they got all tested, and the ones that didn't hold up came with a caveat. Like on Monday, I said, the note said that let's say the RUT, which are the small caps, we said 1170 is going to be resistance where it starts. 1185 much stronger. Guess what? 1170 was the close almost. Up until a minute before the close, it was at 1170, and then they pushed it up 3 points. But it's a rubber band. It's never a hard line. So you gotta, if I have a resistance at 1170, I never take a position at 1170. I build a big buffer above it. I just use it as a gauge. IWM, I said on Monday. I've said smarter, closer calls since then, but I'm taking the worst case scenario going back to Monday with the levels. I said even 1116 is small support. Where'd they close? IWM 1116.71. That was 1116.4, like with a minute to close or something like that. So it still held. I said no major clear lines of resistance, so bulls have the room to run if they decide to do that. So I said no support, there's no resistance, so I usually don't short something with no resistance. I said on the triple Qs, that's the NASDAQ, this resistance starts at 100, so it's going to open in resistance territory. But then every line is small, nothing too meaningful, decent supports should we sell off. So there's nothing too meaningful, so I can't trade it short term. I can trade it long term in a thesis like I have, and I did. But short term, I don't have clear levels. Apple, we said 109 is the resistance where to close. 109 and a penny. Oh my God, a penny away. So it did try several times, but it reverted back to the resistance. And Google, I said pretty bearish setup, so I didn't go long Google. I want to, but the sentiment on Google, that's part of the second part of this video. I'm going to go into some names. The second part, the sentiment on Google is negative. I'm starting to read too many people again on the same, oh, Google had a death cross recently, so oh my gosh, it's going to go to 500. I don't think it is, and if it is, I'm going to go along it both hands and feet. So yesterday it sold off. I think it's sold off on the headline that Apple is doing some search engine technology. If that's the case, then okay, I could buy that as a threat to Google. So if I'm worried about a long position in Google, I'll buy it at a put spread and sleep well, just in case. It's a cheap one. It doesn't have to be an expensive one. I can do it weekly to protect myself until my trade expires. Okay, back to the SPY. I said anything above 201 is resistance back on Monday, and I also said it's also support if we're going down because it's just high open interest. And 200 can be downside pressure, but forget about that. So I said the SPY had the support to mount a rally. I said, as literally said, it has the support it needs to mount a rally. Means I don't short it. Okay. I don't have a clear where it's going to stop, and I don't short it. And they went up to 203. I don't short it for the week. If I want to short it based on a thesis, I can, but I don't play it on a weekly basis. SPX, I said 2025 sticking out. Those are the words I use. Sticking out as a big line in the sand. And also said the resistance above it, and I said 2050 it looks like a wall, and then again at 2060. So guess what, they closed at 2032, but they were in the 20s, 2026, 7 with minutes to close. So we hit it almost on the nose as far as resistance. Again, if I said 2025 is resistance, I don't short it at 2030. I go way higher and short it if I'm playing the weeklies. So the levels held up. Even though they don't look like they held up, they held up. How do I use them is the tricky part. If I read 2025 and I put the short at 2025, I'm making a mistake, because I always say it's like a rubber band. They might exceed it. They might go completely blow through it, and because of a headline. So I need to leave a buffer. I need to leave room for errors. If I dangle upside down from a rope, I don't want to do that unless I have another second rope holding me up. What if the rope breaks? Yeah, I'm not going to put my life on the line on one rope. I want at least 2 ropes. So that's the overall picture. Now, you can stop the video here if you don't want to hear about particular names, but I'm going to go through some names. And because of questions that went back and forth today, I made some notes, and I think everybody will benefit from them. All right, first of all is, another point I need to make actually before we do the names. As a matter of fact, I may break apart the video for the names. It'll be quicker to watch and easier to break apart. But I have a point to make, believe me. This is the SPX. See how it's high, and the slope is upward, even though this is a doji candle today. This candle was red up until the last second, right? I'm going to show you something else that's evident. Not so here. We had tapering love in the small caps. See how the candles are not okay, and I think it's more evident. I have another slice that shows it. This is the NASDAQ. It's more evident than the NASDAQ. I mean, except for that small candle here, I can draw a line with, kind of a roof. So not as exuberant as the S&P. So SPX. Things to keep in mind. All right, this is today. I'm going to zoom out here. 15 will make the point. This is a 10-day up channel trend that we've been trading inside or thereabouts, and today they closed right at the bottom of it. That doesn't mean they're going to sell off. I'm just making an observation. All right, so this is the NASDAQ, and you can see that point I was making here. It's more evident here when I zoom in with the last 10 days. You can see right here is the surprise. As a matter of fact, I'm going to note it with a bubble. Japan announcement right there. Okay, so that jumped up to here, and then we leveled off. We're just trading around that level. Okay, so what next? the taper is more evident here. We broke that ascending channel that we were with the Nasdaq, and now we're tapering off. What comes next? Another leg up? Is Japan's going to infuse another one? This is what caused the first leg, and even then it didn't break the up channel. So I'm just saying, there are a lot of signs that say, okay, we're bullish, but it's not it's the game ain't over. So don't just jump in, pile in if you're not long. And this is the channel that was the small caps. Let me see if I can zoom in. So we're bouncing on these lows. I don't like it. That we should be bouncing higher, but still a decent, nice trend that we can probably trade, or an active trader can trade. So this is it as far as next week. What do we expect? Headlines should be coming from Asia, I think, over the weekend. So Monday, I think we should come in with a negative bias, but usually Mondays, if nothing happens over the weekend, people want to buy up on Monday. So we'll revisit the levels before Monday, so we would have a little more intelligence by Monday before the open, and then instead of just guessing now which way we're going to open, up or down. I think what happened today is a little bearish, even though the VIX was clobbered. But everybody says, oh, the bond market is smarter than the stock market. Well, if that's the case, the bond market was up 1% today, and the stock market should have listened and be down. So I'll leave you with that. If the bond market truly is smarter, then today was a bearish day, even though the scoreboard doesn't show it.